the way that the system is set up now is it's basically telling me, okay, work until you're 62, 65, and then hopefully you've invested enough that you can live off your investments and live the same lifestyle that you live now.
We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the CashFlowPro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, welcome to CashFlowPro, your podcast of the week, and we are here with Brian Hemedinger of Maebar Capital. And today we're going to kind of dig in and talk to him and see what got him started, his passion for business, and everything in between, all of what he does on a daily basis. And hopefully we can kind of get you where you want to go and help you with your efforts in capital raising and just business in general. So welcome, Brian.
I'm doing great, man. Thanks for having me here.
Yes, sir. Absolutely. We're glad to have you and hope that our listeners can find some value in what you have to add to their life and business life and everything like that. So tell us a little bit about, let's kind of start with Maebar Capital, maybe where it started, how it got to where it is today, and then even possibly where it is today, and then going forward, what your outlook is. So go ahead and give us a background.
Well, where to start? So we'll start with Maebar Capital, and then I'll kind of backtrack. So Maebar Capital, what we're doing with Maebar Capital is really helping working professionals to invest passively in real estate. And this is something that it came to me because I came to learn about passively investing in real estate a few years ago, discovered the power of that, and then discovered a passion for that business, and then ultimately wanted to help other people do the same thing. So that's the kind of brief version.
Sure.
Where it really comes from, just a little bit more about my background is I actually started my professional career, my adult life as an actor. So I went to undergrad for acting, I went to graduate school for acting, moved to New York City. And that's what I was doing for really the first 10 years I was in New York City and the first kind of 10 years of that post-college life. And from there, so in some ways, there was a little bit of an entrepreneurial element to that, but it was also pursuing a passion, pursuing something that was a little bit different, choosing my own path. And I got to a certain point when I was acting where I had accumulated quite a bit of debt. I had been about $95,000 in debt between student loans and credit card debt because I was generally making about $30,000 to $35,000 a year. Not just acting, part of it was acting, part of it was doing other jobs that were paying the bills. And at that point, I decided to shift because priorities shifted. I realized that financial stability was more important to me at that point, and I wanted to really put my energy into something, a career that I could really grow. And I took a sales position with an upscale fitness brand, and I still work full time for that upscale fitness brand today. And that's what really introduced me to business. I had a passion for fitness, so it was a natural fit, and found that I was really effective at sales and grew my career at that brand, and then started to really learn business because as I became more of an operator within that brand, it was really running fitness clubs and running multiple fitness clubs and managing a P&L and all the things that go into business. So as that developed, eventually I started to see, okay, if I can do this, what else can I do? And eventually, I think a lot of us, and maybe some of the listeners out there can relate to this. I think when you're pursuing a corporate profession, for a lot of the time, you might be focused on your career growth within that company. But then you get to a certain point where you start to look a little farther ahead and you start to say, all right, well, what else do I want to accomplish in life? Because you kind of reach a point where the growth the company is not going to give you that growth anymore. So it's really up to you to create that growth for yourself. Yep. And so it was really two things that brought me to real estate. One was wanting to create financial freedom outside of a full-time position. And two was just wanting to develop another skill set and grow as a business person, as a professional, and just as a person in general, in that pursuit of creating my own business.
Sure. I tell you, the first thing that I want to revert back to what you said in the very, very beginning, and it was to everyday people being passive investors, and that was, of course, one of the first things you mentioned. So I assume that's a passion or something that you really want to share with people, and our listeners. We talk so much about financial freedom, and we talk so much about the ability to escape the what 9 to 5 or whatever somebody wants to call it, which, I've also been a big proponent of, hey, good tax-paying citizens that want to do the same thing every day. It's wonderful. And how do they become involved? And what you said was, helping just everyday people that maybe they don't want to own real estate or manage real estate or be the guy that goes and kicks the family out the week before Christmas or whatever the case is. But when they become passive investors, there's nothing wrong with working a 9 to 5 job, but take that money and invest it into something that then pays you the dividends, not the dividends, because I don't want to, our passive income is certainly much greater than what most people would look at dividends as being, mm-hmm. I guess is what I'm getting at. So dig in a little bit there into how, like, why did you all of a sudden kind of feel a passion for helping the quote unquote everyday person, the 9 to 5 guy, showing them kind of the path in this and where it led you to as far as like getting your business started?
Great question, Casey. So one is, I think that there's a quote out there, I don't know whose it is, but it says you're best positioned to help the person that you once were. And what happened with me was, after working in this role, not this role, actually several different roles, but working with this company for about 10 years and just being so focused on career, I went to a Tony Robbins seminar in 2016,
sure.
And that started to open my eyes up to kind of other things. And that led me to other seminars. And one of them was a financial seminar. And that's where I really started to think about what other kind of financial opportunities exist beyond what I currently know. Because what I knew at that time was, okay, I work, I get a paycheck, I invest part of that paycheck in a 401k. I invest part of that paycheck in a brokerage account that my wife and I have. And we have a financial advisor that helps us with that and does sort of that traditional 60-40 kind of higher risk, lower risk split, stocks, bonds type of thing. Yep. And I didn't really even truly understand what we were investing in. I was just kind of trusting the system and trusting other people with those investments. Yep. And I think what kind of woke up in me was, we're talking about our future, and we're talking about two things. One is the way that the system is set up now is it's basically telling me, okay, work until you're 62, 65, and then hopefully you've invested enough that you can live off your investments and live the same lifestyle that you live now. But don't increase the cost
Yep.
of your lifestyle.
Yep.
If you got to live the same lifestyle that you live now, and you've got to work till 62, 65 full time. Yep. So I was like, okay, well, there's got to be I actually really love working. I love my company. I love the role I'm in. So it wasn't about getting out of it, but I said, I want the flexibility. I want the options, and I want to be able to do more with our life. So that was number one. Yep. And so that's kind of led me to getting more educated. And the reason why I'm so passionate about helping other people with it is because I feel like there's a lot of people that are like me, and I'm not that far removed from that, and I'm still learning all the time, every day. But there's many people that I think are like me that trust that system and aren't really taking control of their investments. They're trusting the process, and they're giving it to somebody else. And I just think there's so many opportunities out there that we don't see if we don't start to look for them. And I'm guessing that listeners to this podcast, at least a seed has been planted. They sought out this information because they're already realizing on some level that, hey, there's other options out there other than just investing in a 401k and a brokerage account, investing in the market.
Yep. And the classic, I drew 2 points out of everything you just said. And the first being, the old, I don't want to say the brokerage, the general 401k brokerage go-to is, well, everybody thinks that, hey, if I want to go buy real estate, or I want to go do this with this money, or I want to go do that with this money, I'm seeing for myself other investments. The go-to of the brokerage is, well, you'll just, taxes and penalties will just eat it up. When in fact that's not, there's ways to do that these folks just don't know about. Because when you take that money and you put it to work into something, you might see a high gain opportunity into something. Well, take your self-directed IRA or checkbook IRA or whatever the case is, and put it into there. And these guys this lobby is so strong, and these guys have such a stronghold on controlling this money, and people are just scared to even go in and ask. And it's like, come on, guys. I mean, are we here for the customer, or are we here to be self-serving? No, we're here for the customer. Let's tell them what they can do to grow their money, because eventually some of that money may come back to the stock market or 401k or investments otherwise. But at the same time, don't scare these people into saying, hey, no, you can't do that. Taxes and penalties will just eat it up. And then the second point, that one thing that I learned in my own personal story from what you said is, you were talking about help the person. Was it help the person you used to be? And another kind of play on that a little bit is your mess becomes your message. And so, when people get into financial ruin, or they get into whatever it is, a lot of times the folks that what my grandmother used to say, waller in their mess, don't necessarily learn. But the people that do learn and say, hey, these are all the things I did to screw this up before. Let's not do those, and let's go forward. But not only that, let's tell other people, hey, if you're in that position where I used to be, look, all you got to do is do this, 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 and this, and you can be here. And that's such a good topic, and probably an entire topic for another, or that's more of a Tony Robbins kind of. You said you went to a Tony Robbins conference. It's more of a Tony Robbins thing. Is just get up. I mean, get up and do, get up and be, get up and move. And I love that about your story. I love that about what led you to where you are today. And I think that's very admirable, just a very admirable position. But anyway, your mess becomes your message. Help the person you used to be, and get up and go forward. And don't be scared to talk to your financial advisor about exactly what we just said. Look at real estate. Talk about real estate. They're going to say, no, you don't want to do that, because you know what? You're taking money out of their pocket. So with that being said, let's chat a little bit about specifically Maebar Capital and what it offers, what asset classes you're looking at, what investors look at when they come, or what kind of questions maybe they ask you when they come that you can answer that maybe our viewers might have as well. So tell us a little bit about Maebar Capital.
Maebar Capital came out of really me learning the real estate business. So what I did was, once I got more serious about really investing in real estate, because there was a few years of listening to podcasts, reading books, going to some meetups, but not really doing anything, just kind of taking it in. And when I joined a mentorship program in September of 2020, a program called Jake and Gino, which has been tremendous. And that's what really educated me on multifamily. And through that process, I started to pursue investing in multifamily, and I took the traditional path of, I chose a market to focus on. I was focused on Reno, Nevada, and kind of, created my criteria in terms of the types of properties I was looking at, the class of properties, the size of properties, et cetera, and would go to the market, would meet with the brokers, et cetera. And in doing all this and meeting a lot of other investors, I realized this is a team sport. Very few people do this on their own. Very few multifamily companies are one person that is doing this. It's a team, and there's different skill sets on that team, and those skill sets complement one another. So as I learned that, I decided okay, I want to focus more on the capital raising side of the business. Because what I love
Yep.
to do is just what we talked about, which is I love to introduce people to what multifamily investing is. I love to educate them and help them get to the point where they are ready to invest. So that's what we do at Maebar Capital, is basically partner with really high quality operators that are in the markets that they're focused on, that have a track record in those markets. And the way that we add value is by helping them to raise capital for their properties, for their deals. And by, again, attracting and educating investors and then connecting them to those deals. And so that's one thing that's what Maebar Capital does. But at the same time, I'm also, as an investor, I invest passively. And I also invest in what we call joint venture type partnerships, where you partner with maybe a few other investors and purchase a property yourselves without outside investors, that you have a lot more flexibility for longer term holds, et cetera. So I'm kind of doing all those things. But the Maebar Capital piece is more of the, again, partnering with high quality operators and helping by raising capital.
Yep. So it's let me simplify everything you just said from a capital standpoint for the listeners, and it's three words, guys. It's fund of funds, and it's essentially the same thing. You know, you take, it's the same thing. It's the same thing we do at 3000 Capital, and basically you take, you know, he's out vetting operators in a geographical area that he understands, that he knows. He, like he said, Reno, Nevada, maybe, for instance, and he knows just a top tier operator out there that maybe you either A, wouldn't have ever found in your search, or B, maybe you pick this guy's competition and he's fixing to go broke, or whatever the case may be. And so Brian has went out, vetted him, knows his process, knows the properties that he's looking for. And I tell you, it's the coming of the ages type investment opportunities is what Brian's talking about here. And when you start looking at being able to kind of niche this down, a geographical areas, it was big to me. Brian, was that big to y'all? That was really big when we started kind of looking at operators, because you got an operator that's spread. I'll let you talk in 1 second. You got an operator that's spread between LA, Denver, and Nashville, and Baltimore. You know, the thing is that none of those assets, or the say the residents of those assets, if they're multifamily, are really even in the same position in life, because just simply by where they live. So geography was big to me. Something that just that I never really looked at and never heard many people talk about, was saying, hey, let's pin this down, because the Reno market's going to be different than the Baltimore market. You know, just in general, rents, same thing, may rent for twice as much in one place or the other. So was geography big to you all?
Geography is, yes. And I think especially in this market, because this is such a competitive market, that ideally I want to work with operators that are in those markets that know it so well, know it street by street. Because to me, those operators that know that market and have that, what we would say, market advantage, they've got the relationships, they've got the knowledge, is they're going to be able to see some of the opportunities that other people don't see. And they're also going to be able to see some of the things, some of the risks that other people may not see, and something that looks really good on the surface. So that, especially in a market like this, because
right here locally, and I'll give a real world example of exactly what you're saying. Locally, you know, I know a guy that bought I think it was a 36 unit complex, fairly small. Bought it for $600,000. I know, isn't that crazy? 36 unit. I mean, it's just nuts. The kind of stuff that we're running. Maybe it was 24 units. I can't remember the unit count. Either way, he bought it for $600,000, sold it for $800,000. Okay, made $200,000, and in where we're from, $200,000 is I mean, that's a pretty savvy move. All right. Well, the guy that bought it for $800,000 turned around and sold it for $3.5 million. Okay, raised the rents, did a few minor this, that, or the other, sold it for $3.5 million. All right, well, that property has traditionally in our town been somewhat problematic. Law enforcement, current crime stuff type things, just generally, And so what I'm getting at is that the guy that bought it for or the group or the investor, whoever that bought it for 3.5 million was strictly looking at the numbers. They hadn't came to somebody locally and said, "Hey, what about that?" Now, I hope that the raised rents and the new asset type class that it's obviously been bumped up to, I hope that changes things, cleans it up, and makes it a respectable place to live. But at the same time, it's just like, a group from here bought this asset here, and everybody made money along the way, but geography played huge into that. I mean, I'm sorry, about like niche down into the market. And so and then tell us a little bit more about how you vet an operator and what other types of areas you check for, that you check into about them before really telling your investors, "Hey, I think this is a good guy to partner with."
So a few things. One is I'm just knowing the person and trusting when I say person or people or the team is first and foremost to me. And I am somebody, I've realized through this process that it takes me time to develop that. It's interesting because I realized that I think by nature, there's a little bit of a lack of trust, even though I feel that most people are trustworthy. So I believe in humanity, but it just takes me time to feel like, hey, I can like the person, but it just takes me time to feel like I can absolutely trust this person. So I've realized that, and it's actually taken me even longer than I realized. So one is just getting to know the person, understanding who they are as a person, understanding not just in their business, but outside their business, spending time with them, visiting them, and really seeing how they operate their business, understanding the culture of their business, understanding their team, to just make sure that it's in full alignment with who I am and the types of investors that I'm attracting as well. So that's number one. And then, of course, the track record. And the track record is important, but at the same time, everybody starts somewhere. So there's, you may have someone that's had, 20 transactions in the past, right? They're very experienced. So you may have somebody that has 3. Doesn't mean I won't work with the person that's had 3. It just means I need to really, really understand I really need to feel confident in their capabilities. Whereas the person that's done 20 or has that reputation in their business, their credibility kind of precedes them.
Yep, that's right. And then of course, just how they operate and so on. Yeah, that makes perfect sense, man. I mean, that's the heart of our business and business model is the operator, everything about the operator. And man, I mean, you're like everything you're saying. It's the same exact thing that I preach every single day is, hey, the guy that's done 2, 3, 4 deals and the guy that's done 50 deals, it doesn't mean one's better than the other. It means one's probably knows a few more nuances than the other, or a few more, kind of the brevity of what they're getting into versus somebody that's maybe a little bit green or, but nevertheless, and in general, business can teach you a lot about that stuff. Just general business practices. Do they have systems set up? How do they communicate? And that's what, a guy said one time, communication with your investors, that's where the whole pride of your company resides is communication with your investors, because that's what people want. They want to know when they're going to get paid. They want to know when you're going to talk to them next. And if they know those two things, and you can have what so-called, I've actually, Brian went from referring to it as a fund of funds to investor relations business, basically, because, we want to be in the, we want to deal with the investors. We want to talk to the investors. We want to help the investors. We want to make sure that they understand where their money's parked and so on and so forth. Now, so the deals that we're all doing, and I wanted to go back real quick to just a couple of minutes ago and give Jake and Gino a plug. Those guys are just outstanding in the industry, and as you can tell, the way Brian talks, the way the knowledge that Brian has, the get it. And I'm not even in the mentor business because I'm not looking to mentor folks. I'm looking to educate, help, and then go gain investors and so on. So what I'm getting at is get a mentor. You heard the importance right there from Brian of what the importance of a mentor was to him, and how, because there, again, those nuances, those little things that you may or may not know. You think you've got a business stack, a capital stack, you think you've got it all figured out, but when you look for and have that mentor to bounce a question off of or whatnot, man, yeah, I mean, those guys are great, and so you really feel like having a mentor just maybe shortened your length of time of learning, and tell us a little bit about how that helped you get rolling.
Yeah, it's
forward.
Such an important point, because I generally feel like people fall into one of two categories, or they fall closer to one of two categories. And that is, you have people that have a bias towards taking action, right? People that just do. They're like, they get the idea and they're like, all right, I'm going for it. And it's that sort of ready, fire, aim approach. And then you have other people that, and I put myself more in this category, other people that just take time. They see it, the seed is planted, they start to study, they start to say, oh, I don't know. Okay, well, maybe I should go this direction, do a lot of analysis, and then have a bias for not taking action. And I think mentorships help both of those people. Because me, again, I fall in that second category, and I don't know, when I joined that mentorship program, that's what got me into action mode, because there was a process, there was structure, there was accountability. I'm around other people that are doing it, that then gives me more confidence and certainty that I can also do it. So it's been tremendously helpful, in addition to, of course, the knowledge that you gain from it. And then for other people that I've met through the program, it's more that maybe are more biased towards taking action. It's helped them tremendously, because usually they've done some stuff before they've come in, and then they start to get more information. They start to get more coaching, and they realize, oh, okay, oh man, I made this mistake. And they start, since they're already taking action, they get the return on their investment so quickly, because they start making changes that immediately increase their profitability or save them from potential mistakes that would cost them a great amount of money. So it helps both of those categories of people. And then again, community is just so powerful. And what I like so much about the Jake and Gino community, I'm sure others are great as well, but the Jake and Gino community, just really generous, kind people that want to genuinely help each other. And you attract who you are, I think, and Jake and Gino are excellent people, that their heart is in the right place. So I think they attract other people that are just, very heart-centered entrepreneurs, and just have really strong reasons for doing what they're doing. And so that has been tremendous as well, as just creating those friendships.
So when you look at the mentorship and you come in and yeah, I mean, everything you just said makes so much sense. And I was one of those people who I've always kind of been the DIY, if you will, the DIY kind of guy. But once I joined my mastermind and got my mentorship, man, I mean, it really fast tracked things. And so, no, I that was just something I want to dig into. And I think the listeners definitely need to understand that's almost a key piece. That's almost as big of a key piece as defining your avatar or figuring out your operator folks, or whatever the case is. So anyway, Brian, anything else you want to add? Any other layers of this that maybe we missed, or maybe, I know obviously you're like myself, we could talk all day, every day, and make different discussions about different topics and so on. But anyway, anything you want to add about maybe Maebar Capital or yourself, or anything other?
Yeah, so the other thing I would say is, some of the listeners might be listening and maybe have the interest in investing in real estate, and are kind of on the fence whether they want to be active or passive. And I would just encourage everybody, if you have the desire to be active in some way, go for it. Get the coaching, get the mentorship, but the pursuit of creating your own business, especially if you're a full-time employee, it's so empowering. You learn so much in that process about business, about yourself, pushing yourself outside your comfort zone. There's just so much growth that happens just in the pursuit of creating your own business. It's okay if you're not moving at the same pace as everybody else, but if you're just continuing to move forward, there's a lot of gratification that comes from that. And I've learned that. And, one great way to get started is investing passively to give yourself that exposure. But if you have the interest in going active, find a way to start to get active as well. Start getting around other people that are doing it. And, they say your network is your net worth, right? So get around other people that are doing it, and it will help you to create that identity as well of being an entrepreneur.
All right, Brian, well, tell the listeners how they can reach you if they'd like to reach out to you or Maebar Capital. What's the best avenue for that?
So a few things. You can go to the website, which is www.maebarcapital.com, Maebar capital.com. Email is brian@maebarcapital.com. Instagram is @Hemedinger, and LinkedIn, if you just put in Brian Hemedinger, I think I'm one of the only ones on there. You're going to find me.
Awesome. Good deal. That's great, man. Well, listen, thanks, Brian, for being with us today. Thank you all for listening to the CashFlowPro podcast. And this is Casey Brown with 3000 Capital. And we're so glad you chose to spend a little time with us. And it's just like Brian said, get up, do something. You may not be doing it right, but hey, get up and do something. So again, thank you for listening to the CashFlowPro podcast. We hope everybody has a wonderful rest of your day. Thank you. CashFlowPro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.